Hello and welcome to Entrepreneur Money Stories. Have you ever considered the benefits of hiring your children to work in your business? If so, this video is for you. I'm going to detail the pros and cons of hiring your kids, how it can be done legally, and how to ensure compliance and success. This strategy could reduce your taxable income, provide tax advantages, and create generational wealth. So, if you're searching for a way to reduce taxable income while giving your children valuable work experience and opportunities, this strategy might be for you. My name is Danielle Hayden, CEO and founder of Kickstart Accounting Inc. We have worked with thousands of business owners using bookkeeping as a vehicle to help business owners better manage their businesses and use their numbers to grow and thrive. I had a client who had called us a few years ago and asked about hiring their two children. And her two children were actually very different. They had very different personality types, and the activities that they were capable of doing were very different. And actually, both her and her husband had a business, and they were structured differently. So we had a lot to work with. And working with this client in our monthly financial review call, we had worked through both children, what their skill sets were, the structures of both her and her husband's business to best determine if this strategy was right for my client. Now, this client, she had a million things going on. Mother of two, her and her husband were both entrepreneurs. And I will never forget that day, the conversation that we had. I mean, she was so stressed out, kind of hair in a big messy bun on top. Her office was a mess. And she's like, Danielle, there's so much that I want to do. I get so busy working in my business that I'm forgetting to be intentional with my family and the way that I'm creating a legacy for my children. And so this financial review call, we really stepped back and worked on her business instead of always being in the business. So in this call, I feel like I watched her messy bun come down. I watched her just ease and her shoulders just kind of relax in as we talked about the ways that we could optimize strategies for her and her business. So like I said, she had two kids. Her younger child, not the older child, the younger child was actually very good at organization and structure and was really good at helping get the packages out in her husband's business and was kind of already helping anyway, just because she liked to help. And so we determined that because her husband was structured as an LLC, and because her younger daughter had better organization skills and most importantly, an interest in helping him, that it was a better fit for her younger daughter to help her husband in his business. Now, she really wanted to be able to employ her older daughter, but because there wasn't an interest, and because there wasn't any specific job responsibilities that aligned with her older daughter's skill set, and because she was structured as an S Corp, we actually decided that she was only going to be able to hire one of her children at this time. Now, I don't want to hear about the conversation at dinner that night. I wasn't there for that. So I want to give you a framework on how you can determine if this tax strategy is the best for you, right? So remember, the benefits of this is going to be that there are tax benefits if you are paying children under 18 as a sole proprietor in LLC. You will not have to pay FICA tax. You'll be able to contribute to IRA contributions, education savings, and a strategy called income splitting, right? So there are lots of benefits, but before we decide whether or not we can take advantage of these benefits, let's look at the framework to determine whether or not this strategy is right for you and your children. So the first step is to determine your legal structure. If you don't remember, you got to go back to your original business formation and determine, are you a sole proprietor, an LLC, a partnership, or corporation or S corporation, because each of these entities are going to handle paying children differently. So in a sole proprietorship, the business and the owner are considered the same legal entity. That means any wages paid to the owner's children are treated as a business expense, and wages paid to the children under 18 are exempt from FICA, and the income might be subject to a lower tax rate due to their lower income levels. So this is a strategy as a sole proprietor that could be beneficial to lower the tax liability because you're not paying FICA tax. In a partnership, the taxation and payment of children is similar to a sole proprietor. So again, the income and expenses are passed through to the individual partners, and those payments to the children will not go through FICA taxes. An LLC can be taxed in three ways: a sole proprietorship, a partnership, or a corporation, depending on the election made by the owner. So if you are an LLC and you have not elected to be an S Corp, then these rules that we've already talked about as part of a sole proprietor, these will apply to you as an LLC as well. Now, if you are a corporation or an S corporation, this is where things change. So as a corporation S Corp, when you are hiring your children, they will be subject to standard payroll and the income tax rules, just as non-family employees are. This means that the FICA taxes are applicable. Now, as a corporation, an S corporation, you will be able to deduct the wages paid to your children as a business expense, which does reduce the company's taxable income. So you are still enjoying the benefits of paying them through your business on payroll, just like you do the rest of your employees. And just like your other employees, this will reduce the amount of taxable income. So step one, we need to determine our legal structure and what that will mean for the way that we set up our children. So sole proprietor, partnership, LLC, not structured as an S Corp, will be able to pay your children outside of payroll. Corporations and S Corp, we will need to pay our children through payroll. So that's step one. Have you heard yourself saying, I'm scared to invest money in my business because what if it doesn't come back? I don't know how much to pay myself, so I won't take a paycheck yet. I'm reinvesting in the business anyway. Or how about, I'm not going to spend any more money until I know exactly where my money is going. Well, let me tell you, you are not alone. In fact, we have heard all of these stories and more throughout the last 9 years at Kickstart Accounting Inc. And that is why we have created the Money Mindset Mastery Framework to finally unlock and overcome these stories, to finally feel confident in your financial decisions and pay yourself what you deserve. The first step to create a profitable and successful business is to first understand your money mindset. Find out your money mindset personality type by going to kickstartaccountinginc.com/quiz. I can't wait to hear what your money mindset type is. Step two is consider your children. Your children must genuinely work for your business to receive compensation, and they should be performing age-appropriate, legitimate tasks, and they should be paid a reasonable wage for their work, right? So we need to determine, are our children actually interested? Do they have the skill set, and are they capable of doing the work that we would like to be done? And I want all of you, as you're thinking about these strategies, I want you to think about protecting yourself, right? These need to be legitimate tasks. They need to be age appropriate. So to say that your 3-year-old is helping you as a project manager, right? We need to make sure that we are really aligning the interests, the skills, and the ages of our children with what we're looking for them to do. Step three. Once we've determined that, yes, our kids are interested, we have the right responsibilities for our children, we've determined our legal structure and how we're going to pay them, we need to document the work. You have to keep thorough records of your children's work, including the job descriptions, hours worked, and the tasks performed. This documentation always is going to support the legitimacy of their employment if the IRS ever investigates. So we want to make sure that we have documentation for everything that we do in our business. So don't forget to document the work. Record keeping. We have to keep financial records of all of the payments to make sure that we are complying with tax laws. So if you are a corporation or an S Corp, we want to make sure that we are paying our children through payroll, abiding by all the same tax laws that we are doing for the rest of our employees, and that we're paying them a reasonable wage. The wage that we're paying our children should be in line with what you would pay any non-family member for similar work. Paying an unreasonable high wage could attract the IRS and be a legal red flag. Now, this episode, when I was writing it, I'm like, Danielle, this is not the sexy stuff. I care for each and every one of you as listeners, as clients, as business owners. And so I am never going to tell you to do something that I wouldn't do myself. Now, I've told you before, I am kind of middle of the road in terms of how I approach tax and tax laws. I want to make sure that I am always staying 100% compliant, living in that gray area. I don't want to pay more than what is my fair share, but I definitely don't want to be raising any IRS red flags. And so I want to give you, the business owner, that same courtesy and that same responsibility for you to be able to comply with the IRS. Now, there are a few things that I want you to watch out for. The state laws, there are state labor laws and child labor regulations that vary from state to state. So make sure that you are looking at your state rules. This part is really crucial. And just avoid abuses, right? Well, paying your children is completely legitimate and it is a strategy. I will say that both of my children have worked for Kickstart throughout the years. We are doing this within the structure of the business, okay? So we are not abusing the situation. We are staying within the legitimate strategies and the structures of the IRS. The last step in this framework is to evaluate why you might not hire your children. So there's several reasons on why you might not hire your children. Like we talked about, they might lack the actual qualifications or skill sets. If your children don't have the skills or the interest, this could be detrimental to the company's performance and the reputation of your company. There might be a conflict of interest. Hiring family members can sometimes lead to favoritism or impact other employees' morale and disrupt the work environment. There might be resentment from other employees. So it might lead to dissatisfaction in working for your company. So I never want you to experience resentment from the other employees within your company. And lastly, lack of interest. I think that as business owners and entrepreneurs, we love what we do so much. We are so passionate about what we do, but our children, they might not have the same interest as we do, right? They might just not be interested in the family business and they might have different career aspirations. So forcing them to be in the business might just lead for them to have dissatisfaction and reduce the productivity of what they're able to contribute to the business. So I know I would never want to turn my children away from working hard or from entrepreneurship. And so I want to keep their spark for work and for entrepreneurship alive. And so if your children are uninterested or don't have the skills, don't do this strategy for taxes alone. This really needs to be a full encompassing strategy. So to recap, step 1, determine your entity type. Step 2, list out all the possible roles and responsibilities. Step 3, communicate with your kids. Is there an interest and can we match those roles and responsibilities with our kids' interest? Work with your money team to ensure that this is properly set up and that you are complying with your structure and payroll. And then document. We want to document everything that we're doing. And again, work with your money team to make sure that you are documenting in the proper way, that you are paying your children in the proper way. If you have any questions or you want to discuss this strategy further, you can go to kickstartaccountinginc.com and book a call. Kickstart Accounting team is here to help you. We want to be a resource for business owners. So if you want to talk about this strategy or any other strategy, you can book a call with the Kickstart Accounting Inc. team. We are approaching year end. I cannot believe it. We are wrapping up end of the year tax check-ins with our clients, and I don't want you to miss out on this valuable time. If you have not done your bookkeeping yet for this year, look, no shame. I get it. We've all been there. There's literally zero judgment from my team and I, but I don't want you to miss out on this valuable resource. So if you need help with your bookkeeping, if you don't have a money team to support you in your business, again, go to kickstartaccountinginc.com. You can book a call or sign up for services right there. If you have any questions, shoot me a DM on Instagram at Kickstart Accounting. We will be back here with another episode next week. But if you enjoyed today's episode, I asked for you to do one thing in return. I would love if you could like and subscribe and share this podcast episode with one other person who can use this information. I am looking forward to our podcast next week. We'll see you there.